is Kunwar Prateek and I teach economy and current affairs on Gradeup platform. And this is IAS 2021 1000 most important questions series which we have been running. So this is the series which has been continuously run for your benefit, in which we have been practicing questions every day. And today is another day in that series. So without wasting any more time, let's start with today's questions. The first question for today is, with respect to RBI, which one of the following statement is not correct? The emphasis is not correct. A. RBI is the custodian of stock of gold. B. RBI is the custodian of Consolidated Fund of India. C. RBI is the custodian of foreign exchange reserves of India. Or D. RBI is the banker to the government. Which of these are not true with respect to RBI? You have to tell. You have 40 seconds to answer the question. Please answer the question in 40 seconds. Good afternoon, everybody. Please answer the question. Good afternoon, everybody, and answer the question. Not. Okay. Mostly people have been giving answers such as A and B. Good afternoon, everybody. Okay. So now let me answer the question. I think everybody has now attempted. Now let me answer the question. The question says, which is not true with respect to RBI. I'm not asking what is true, not correct. And when you read what are the functions of RBI, RBI does act as a banker to the government. So this option becomes wrong. RBI is a custodian of foreign exchange reserves, forex reserves in India. So this statement is also wrong. Now let's go to statement A. RBI is custodian of stocks of gold. So whatever gold the government buys are kept with the RBI. This statement is also absolutely true, because in the forex reserve, gold is also a commodity which is a part of forex reserve. So option A is the function of RBI, C is the function of RBI, D is the function of RBI, but D is not a function of RBI. Custodian of Consolidated Fund of India is the president. After the budget's appropriation bill is passed by the parliament, President releases funds from Consolidated Fund of India for the use of Government of India. So the answer to this question is B. People who have given the B answer are absolutely right. The answer is B. Okay. Now let's move on to the second question. Second question for the day is, with regards to capitalistic economy, which of the following statement is not correct? Again, the question is, with regards to capitalistic economy, what is not correct? A. It is based on principle of laissez-faire. B. There is absence of government interference. C. There is no class conflict. Or D. There exists consumers' sovereignty. You have 40 seconds to answer the question. What among these options is not true about capitalistic economy? Please answer the question. Okay. D, some are saying D, some are saying C. Now I got a B answer also. Mostly people are saying C. Poonam is saying D. Nabita is saying C. So mostly I am getting B, C and D as answers. Shyam Singh is saying C, Anjali is saying D, Radhika is saying B. Fine. Now let me answer the question for you. Capitalistic economy is based on the principle of founder of modern economics, Adam Smith. And Adam Smith in the book Wealth of Nation emphasized on what? Minimum or no role of government in the economy. So D is absolutely correct about capitalistic economy. And this minimum interference of state, which is government, is based on the principle called laissez-faire. So this is also true. Next, in a capitalistic economy, consumer is supreme. So customers' choices determine what will be produced and how much will be produced, not the other way around. So consumer sovereignty, consumer is free, consumer has freedom to choose. So D is also right about capitalistic economy. But as you know, in capitalistic economy, two classes are created: bourgeois community and proletariats. So there is a class divide which happens in capitalistic economy, because of which mixed economy model as well as state economy model came into being. So capitalist economy leads to class conflicts because of creation of two classes, which is businessmen and workmen. So what is not correct about the capitalist economy is the statement C, which says that there is no class conflict in capitalistic economy, but in actuality there is class conflict in capitalistic economy. So the answer to this question is C. Clear, guys? Yes, Shubham. In theory, no class conflict is a feature of state economy. And there are two models of state economies, which is socialistic and capitalist. अभिषेक चौहान ये पूछ रहे हैं कि पूंजीवादी अर्थव्यवस्था में क्या चीज नहीं सही है, इन चारों ऑप्शन में क्या चीज नहीं सही है, ये सवाल था इनका। तो पूंजीवादी अर्थव्यवस्था में क्लास मतभेद होता है कि नहीं होता है, दो वर्गों के बीच लड़ाई हो जाती है कि नहीं हो जाती है, तो वो सही जवाब है इसका। ठीक है, नाउ लेट्स मूव ऑन टू द नेक्स्ट क्वेश्चन। नेक्स्ट क्वेश्चन इज क्वेश्चन नंबर 3. Liberalization was the main feature of 1991 new economic policy. What does liberalization means? उदारीकरण 1991 की नई आर्थिक नीति का एक हिस्सा था। उदारीकरण क्या होता है? This is what the question is. A. Withdrawal of regulation by government on running of industry. B. Allowing industrial activities to the private sector which were exclusively reserved for public sector. C. To allow free flow of goods and services. And D. None of the above. Please answer the question. What does liberalization mean? उदारीकरण का क्या मतलब है? So I am getting Adesh Singh B, Atiya Singh B, Monica B, Nabnita C, okay, D, A. I am getting A, B, C, D every answer. Saurabh is saying A, Radhika is saying A, Sweetie is saying B. Fine. Good, good, good. Now let me just directly answer the question. The answer to this question is A. In 1991, India adopted liberalization, privatization and globalization. उदारीकरण, निजीकरण और वैश्वीकरण. These three policies were adopted. Now, globalization means you interact with other countries. There is trade between other countries. So, globalization is allowing free flow of goods and services between countries. So, this is globalization. What is privatization? Nijikaran, allowing industrial activities of private sector. In India before 1991, majority sectors of Indian economy were reserved for public sector, and private sector were not allowed to open businesses in certain sectors. Now, after 1991 reform, private sector was allowed. So this represents privatization. And government before 1991 had many restrictions and regulations over industry which were operating in Indian economy. Withdrawal of those regulations, those restrictions is called the policy of liberalization. So your answer is A, is liberalization. Clear, guys? Yes, B is privatization, C is globalization and A is liberalization. Now let's move on to the fourth question of the day. The fourth question of the day is, in union budget, receipts, that is money gotten by government, is grouped into revenue and capital receipt. Which of the following are an example of revenue receipt? In union budget, the money received by government money earnings is categorized into revenue receipt and capital receipt. Your question is, which of the following are revenue receipts? 1. Taxes. 2. Borrowing. 3. Profits from public enterprises. Or D. Investment. Your options are A. 1 and 2. B. 2 and 4. C. 1 and 3. Or D. 3 and 4. Please answer the question. You have 40 seconds. What is revenue receipts in these four options? Okay. Ayodhya Prasad saying C. Okay. Shyam is saying C. Okay. Athiya Praveen is saying D. Kalyani is saying D. Adrika B. Good, good. Try attempting questions. Rachna is saying C. Ram Kumar is saying C. Rudra is saying C. Shankar Kumar is saying C. Good, good. Now let me answer the question. See, the budget is divided into revenue receipts and revenue budget and capital budget. Revenue budget is basically money earned by government from normal sources. Tax and non-tax sources earning of government is called revenue budget, revenue receipt. And capital receipt is money which the government gets by way of borrowing or divesting its asset. Money earned from normal sources that are tax and non-tax sources is revenue receipt. And money earned by either selling an asset or borrowing money is a part of capital receipt. So taxes are part of revenue receipt. Borrowing is part of capital receipt. Profit from public enterprise is what? You're earning from your regular sources. So this is revenue receipt. What is disinvestment? You are selling off an asset. Share of government companies are sold off. That is disinvestment. You are selling your asset. So that is capital receipt. So the answer to this question is C, 1 and 3. Taxes and profits from public enterprises are part of revenue receipt. I hope it is clear to all of you. Good afternoon. Now let's move on to question number 5. Question number 5 is, cash reserve ratio is a part of monetary policy of RBI. It is used to control what? Cash reserve ratio, which is a part of monetary policy of RBI, it is used to control what? A, first, inflation, second, fiscal deficit, third, foreign direct investment, or fourth, unemployment. Your options are A, only 1, B, 2 and 3, C, 2, 3, 4, and D, 1 and 4. Please answer the question. You have 40 seconds. Okay, mostly people are giving the answer A. Mostly people are giving the answer A. Some people have also given B as an answer. Okay, now Sony is saying D. Now let me answer the question. When we talk about monetary policy of any country deals with money supply. Control of money supply is done through monetary policy. And money supply has an impact on what? Demand. And if the people have more money, they will demand more. What will it lead to? Inflation, price rise. So, cash reserve ratio as a part of monetary policy is used to control inflation. Cash reserve ratio, what is CRR? CRR is a policy in which RBI instructs the bank to keep certain amount of their in cash, and that money is not to be used. With this policy, RBI controls money supply. When the inflation goes higher, cash reserve ratio can be increased or decreased according to the situation. Fiscal policy or fiscal deficit control is the responsibility of Government of India, not RBI. So this is wrong. Encouraging or discouraging FDI is the responsibility of Government of India. So this is wrong. Unemployment, decreasing unemployment is primarily responsibility of Government of India, not RBI through cash reserve ratio. So the answer to this question becomes A, that is inflation. Clear, guys? Can everybody see and hear me properly? Can everybody see and hear me properly? Did you understand the explanation which I gave? Explanation to the question, did you understand? Now let's move on to the sixth question. Sixth question says, consider the following statements about asset reconstruction companies. 1. These are regulated under Banking Regulation Act 1949. 2. These are aimed at reducing burden of NPA, that is non-performing assets. 3. These have been created on the recommendation of Narasimhan Committee. Your options are 1 and 2, 2 only, 1 and 3, and 2 and 3. Please answer the question. Okay, Chandra is saying, Krishna is saying D, D, A. Mostly I am getting D and A as answer. Pratibha Kumari is saying C. D, A, C. Now I'm getting A, B, C, D, everything. So now let me answer the question. See, the problem of non-performing assets, that is NPA, in India has been an old one. What are non-performing assets? Bad loans. So for reducing non-performing assets in India, a banking reform committee was set up called Narasimhan Committee, which recommended establishment of asset reconstruction companies. So this statement is absolutely right. Aim of asset reconstruction companies is what? To reduce burden of non-performing assets. And these asset reconstruction companies are not regulated under Banking Regulation Act. They are not. So this is wrong. And what is an asset reconstruction company? If there is a bank which has bad loans, which is NPA, and this bank is not able to recover the loan from the defaulting party, then this bank can sell its loan to an asset reconstruction company which buys these loans at a lower price. Let's assume the bank had given 10 crores to somebody and that person has defaulted and the bank is not able to retrieve the money. So, but bank is going under losses. So asset reconstruction comes in and says, fine, you have 10 crore loss, give me this loan for 7 crore rupees. At least you will get 7 crore rupees. Right now you are not getting even a single penny. I am ready to give you 7 crore rupees, but you take a haircut of 3 crore rupees. So bank agrees and says, fine, you deal with the hassle of recovering the money. I will at least get 7 crore rupees. Then this asset reconstruction company buys the bad loans and then recovers the money from the defaulting party. This is what asset reconstruction company does. This statement is right. This statement is right. This statement is wrong, because Banking Regulation Act is used for regulating banking sector, not asset reconstruction company. Okay, so your answer is D, 2 and 3. Clear, guys? RBI only regulates them, but they are not regulated by Banking Regulation Act. Asset reconstruction companies are registered companies under Companies Act 1956 and 2013. They are regulated by RBI, but not under Banking Regulation Act. Okay? They are regulated under Companies Act. Sarfazi Act enabled. Ram Kumar, Sarfazi Act was an act which led to the establishment of asset reconstruction companies. Okay. Now let's move on to question number 7. Consider the following statements about small finance bank. 1. Fixed deposit facilities can be availed here. 2. It cannot issue credit card as per RBI rules. 3. It has been mandated that 50% if the total loans have to go to MSMEs. Your options are 1 and 3, 2 and 3, 1 and 2, and all. Please answer the question. Okay, I'm getting C, B, A. A is the maximum answer I am getting. Okay. C, A, B, I'm getting A, B, C, D, everything, but maximum I am getting the answer as A. So let me answer this question for you. See, first of all, small finance banks are a new kinds of bank which have been given licenses by RBI in recent past. These banks were set up on the recommendation of Nachiketa More Committee. Nachiketa More Committee on Financial Inclusion recommended setting up of small finance banks. And they work as any other bank. They can open, customers can open saving bank account, business account, fixed deposits are allowed. So statement 1 is right. But small finance bank have to give out 50% of its loans to MSME sector, and 50% of their loans have to amount for less than 25 lakh rupees. So they are there to give small loans. MSME sector requires small loans. So 50% of it, they are mandated by RBI to give out 50% of loans to MSME. So this is right. But as I just told you, small finance bank are like any other bank. They can open saving accounts, current account, fixed deposit. They can also give out loans. When they can give out loans, why they cannot give out credit cards? They are allowed to give credit cards. So this statement is wrong. Small finance banks can give credit card, debit card, loans, fixed deposit, everything. But the only condition on small finance bank is that 50% of their loans should be less than 25 lakh rupees and should be given to MSME sector. So answer to this question becomes A, 1 and 3. Clear? I hope this is clear to you guys. Now let's move on to question number 8. Consider the following statement about broad money. Consider the statement about broad money. 1. It is known as high powered money. 2. It has highest liquidity. 3. It is mostly used as medium of exchange. Your option are 1 and 2, B 2 and 3, C 1, 2, 3, or D none of the above. Please answer the question. Please answer the question. Okay, most of the people are saying A or C, I can see. Let me answer this question for you now. Broad money is basically M3. What is M3? Currency with people, demand deposits with demand and time deposit with banks, and saving deposits with post offices. So M3 is currency in the hands of people, demand deposits and time deposits with the bank, demand deposits with the post office, and the currency with RBI. This is M3. Broad money is this. M3 is the broad money. What is M1? This is M1. What is M3? If I add these three, this becomes M3. Now, this is M3. What is high powered money? High powered money is if I add time deposit to it, it becomes high powered money. So broad money is not high powered money. It is it has highest liquidity. Liquidity means how easily can you use that money? Time deposit, can you use it? RBI money, can you use it? You cannot. So it is not highly liquid. The most liquid in money supply is M1, which is currency with people and demand deposits with the bank. Demand deposits are saving account deposits. Broad money is not used for medium of exchange. M1 is used for medium of exchange. So all three options are wrong. I'll again repeat. M1 is currency with people and demand deposit with banks. These are money supply. M2 is M1 plus save demand deposits with post offices. M3 is what? M2 plus time deposits with the banks. M4 is M3 plus deposits with RBI. This is high powered money. This is broad money. This is narrow money. This is the most liquid. This is the most non-liquid. This is used for medium of exchange. These are not. So your answer becomes D, none of the above. See, broad money is not an example. It is a measure of money supply. It is how you measure money supply in the economy. It's not like 100 rupee notes, 200 rupee notes. It basically tells you how much money is there in the economy. And there are various parameters which are used for that, which is M1, M2, M3 and M4. This is called the narrow money. This is called the broad money. This is called the high powered money. Okay. Narrow money. These are measures of money supply. These measures are used by RBI to measure money supply in the economy. How much money is there in the economy is measured by these M1, M2, M3, M4. These are tools. Simple. If you have a fever, I can check your fever by touching your pulse, by feeling your skin, by using a mercury thermometer or by using an electric thermometer. So there are various tools of checking your fever. In the same way, in an economy, if I want to check what is the money supply, these tools M1, M2, M3, M4 are various tools of measuring money supply. Now let's move on to the ninth question for the day. The answer to this question is D. Ninth question for the day is a substantial rise in minimum support price of selected crops may lead to which of the following consequences? 1. Cropping pattern in some areas may be altered. 2. Decrease in fiscal deficit of the government. 3. Increase in production of selected crops by the farmers. Your option is 1 and 2, 1 and 3, 2 and 3, or all the above. Please answer the question. Please answer the question, guys. Okay, I'm getting D as the most preferred answer. People assume that all the options are right. Now let me answer this question. What is minimum support price? Minimum support price is announced by Government of India on the basis of recommendation of Center Agriculture Price, Cost and Price for 24 agricultural crops of India. It is the minimum monetary value at which Government of India will buy selected crops from the farmers if market price of those crops fall below this threshold of minimum support price. Let's assume that the minimum support price is rupees 100, which is announced by Government of India for rice. Let's just assume, this is an example I am giving. Now if in the open market the market price of rice falls below 100 rupees, then government will buy rice from farmers at 100 rupees per kilo in the market, so that farmers are protected. So this is what MSP is. Now when government will announce MSP, it is an assured price which government is offering. When somebody is assured of a price, will that farmer not grow that crop for which there is assured price which it will get? So it will lead to changes in cropping pattern. So if the earlier the person was growing rice, now if the government increases the MSP for pulses, then there is a chance that cropping pattern may change. The farmer will leave the rice cropping and shift to pulses because it is getting him higher income. That will lead to higher production as well. So this is also right. But now if government is procuring from farmers at MSP, it is spending more. When government spends more, its deficit will go up. So this is wrong. Fiscal deficit of the government increases when government announces higher MSP because government is spending more. So the answer to this question becomes 1 and 2. Your answer is B, 1 and 3, because this is wrong. This is right, this is right. Answer is 1 and 3. Clear, guys? It's B. It's minimum threshold price, minimum remunerative price, minimum money which a farmer is assured. Okay, now let's move on to the last question for the day, which is the 10th question. Fiscal performance index is released by which of the following bodies or organizations? A. Reserve Bank of India. B. Confederation of Indian Industry. C. Finance Ministry. Or D. World Bank. Please answer the question. You have 40 seconds. Hello Sapna, long time. Shri Kutan is saying B. Sheikh Mohammed A. Pragati A. Hanshu Jhakar B. Sony. Okay. Now let me just answer this question. This is a very straightforward factual question. I'll answer it. Fiscal Performance Index measures how well a government in India, central as well as state government, is maintaining its fiscal, handling its fiscal performance, meaning how is it spending the money, how is it not curbing the money, has it reduced its borrowing, is it increasing its income or not. So fiscally, how prudent a government is tracked in Fiscal Performance Index, and this is published by Confederation of Indian Industry. The answer is B, and they track fiscal prudence matters for both center as well as state governments in this index. Okay. FRBM Act is for central government and state government. This is talking about Fiscal Performance Index. It is an index which tracks the performance. FRBM Act mandates by law that Government of India will be fiscally responsible. FRBM Act does not create a Fiscal Performance Index. Okay. So these were 10 questions for the day today. I hope no issues. We will get all the questions right slowly and steadily. I hope you liked the class today. Before I end, I have certain announcement to make. If you like the questions which we conducted today, you can get access to our green card through which you can get access to all our test series. We are currently running 40% off. Naya Saal Naya offer between Jan 6th and Jan 7th now. You can use the code HOPE20 to avail this offer. Now before I end, we at Gradeup have been running our Gradeup Super subscription. It will help you to prepare for your IAS exam preparation. Gradeup Super brings to you a comprehensive course for GS, Prelims and Mains, both in English and Hindi. In this, you will get 350 plus live GS classes, 325 plus PDFs and 5,000 plus practice questions, additional classes for Yojana, India Yearbook, Kurukshetra and CSAT, 30 plus mock tests for Prelims and Mains. Then currently we have been running our IAS 2021 Prelims course, EPFO Prelims course and NCRT module. In these classes, you will be taught by our expert faculty such as Naman Sir, Economics expert, Vasu Katara Sir, Ethics and Internal Security expert, B. Teja Sai Sir, Science and Technology expert, Himani Suri and Shailendra Singh Sir, NCRT expert, Harsh Smith Sir, Polity expert, Rohan Tyagi Sir, Geography and Ecology expert, and then there is me, Kunwar Prateek. I teach Economy and Current Affairs on Gradeup platform. We have 3 subscription plans, 6 months, 12 months and 24 months for 15,000, 21,600, 27,000. You can avail this so that you can get access to our Gradeup Super classes. Then we are conducting daily free classes for you guys on our Gradeup app. Daily editorial analysis at 12 p.m. UPSC EPFO at 5 p.m. Special 5 lecture series at 7 p.m. GS for IAS Ranker series at 8 p.m. Daily current affairs at 9 p.m. So these were few announcements which I had to make. With this, I take your leave. Thank you very much. Okay, Sapna, okay. So thank you very much, guys, for today. I will see you guys in my Gradeup Super subscription classes as well as my free classes. Till next time, bye-bye and see you.